All right, I want to take this opportunity to welcome everyone to this morning's event, Advanced Scanning Strategies. You're going to have Tom Bowley of Earnings Beats and Bill Shelby, special guest from stockcharts.com. A lot to cover this morning. I've already had a couple of questions about will it be recorded? Absolutely. All of our events are recorded. So if you can't stick around for the entire show, don't worry about it. We will make sure that everybody gets a recording of the event. I do want to thank anybody new to Earnings Beats. Really appreciate you taking the time to come in. Of course, want to thank our seasoned veterans as well. This scanning strategies can be really powerful, particularly when you combine it with the tools of stock charts. They've got so many tools over there. And really Tom will get into this, I'm sure, but virtually, any charting that we do is with stock charts. Any scanning, any lists, anything at all that has to do with what we're looking at in terms of trading candidates, the market, really comes down to us using the stock charts tools. Bill will be in a little bit later. Tom's going to kick it off and talk about what we do at Earnings Beats and how to use these scanning tools. And then Bill will come in a little bit later and tell you what's going on at stock charts. Anyways, with that in mind, I know there's a lot to cover, so I'm just going to bring Tom in. Good morning, Tom.
Good morning. How you doing, John?
Good. It's Friday.
Yeah.
I want to mention, What's that?
It's been crazy the last couple of weeks.
Yeah. I do want to mention that, and we'll make sure everybody gets a copy of the content that'll be covered. But we've got a couple of events coming up over the next week for members. It's going to start Monday. We have an event Monday. We've got an event Tuesday, and Thursday is our big top 10 stock pick webinar. Very popular. These are member-only events, but if you're not a member, you'll be able to sign up for a free 30-day no-cost trial to check us out. You don't want to miss these. There's just so much information that we're going to be covering. And again, all of these are recorded in case you can't attend the live event. So everybody will hear more about this over the next day or so. All right, with that in mind, Tom, I'm going to step aside, let you take it away.
All right, sounds good. Yeah, all of those events next week are going to be really big. Monday has the potential to be really big because as I'll go through and show you a little bit this morning, there's a lot of things that are taking place in the market that are opposite what we saw back in March and April. Back in March and April, we saw a lot of gap downs and then a lot of recoveries in certain areas of the market, and the accumulation distribution line became a very important technical indicator for us this year. Well, I'm seeing a lot of the opposite taking place recently, and I'll show you some numbers. I think it's pretty eye-opening. But we've been getting a lot of gap ups and then selling during the day. And so we're seeing morning strength followed by afternoon weakness, and that's normally not a good sign. And I'm going to go into a lot more in depth on Monday. We don't have time to do that today. We want to focus more on the scanning. But when you're scanning, you do need to take into account the market environment. So, when we set this up about a week ago, I was thinking, okay, this is just going to be a pure 1 hour scanning. And then we're going to bring Bill in, and he's going to, give you a lot of great information from stock charts. And, we're very fortunate to have Bill Shelby joining us later because he is very busy at stock charts. And I feel like, we've got a great relationship with stock charts and with a lot of the folks there, and he takes time out of his day to join us. So we're really fortunate to have him joining us today. He's the one that created the scan engine at stock charts. So if there's anybody that can answer a question about scanning, it's Bill. So we're really fortunate to have him with us today, and we'll get him in here around 11 o'clock. Remember, he's on the West Coast, so that's 8 a.m. Usually in the morning, any issues that come up, he needs to be available. So I gave him the option whether to start at 10 or 11, and he thought 11 might work out better, just so he had some time there at the office to handle any situations. But he will be with us in a little bit. But as I look at what I want to present today here in this first hour, I know that we have a lot of you that are not members at Earnings Beats, and a lot of you maybe that will be listening to the recording later that are not members at Earnings Beats. So I think it's important that you, before we just jump into scanning, that you have a little bit of an idea of what we do, and also the market environment. And I'm going to start off with that market environment. First, let's pull up the agenda for today, and I'll go through some of the things that we're going to be talking about. So we're going to start, obviously, introduction. Welcome, everyone. Then we'll get into the recent market action. And I think you're going to find this kind of fascinating. And then market research and our scanning strategy, some of the things that we want to do using the research. Our research platform is critical because it provides us a filter. Before we start applying scanning strategies, if you just put a scanning strategy out there in the market against all stocks, you're going to get companies coming back on scans that might have heavy volume, but they may be companies that just reported horrible earnings. And so we like to filter and use chart lists at stock charts to organize our research into various chart lists. I think it's a great way to approach the market. And then we apply scans to our chart lists. And I'm kind of excited to see what Bill comes back with later, because he asked me to send him a few of our chart lists. So I sent him our strong earnings chart list, our strong future earnings chart list, and our raised guidance chart list. And so maybe he'll have some really good scans. I don't know. We'll see what he comes back with. Like I said, he's going to be here at around 11. But I got a lot to go over, so I don't want to spend too much time there. We'll get into a Q&A later in this first hour. So if you have questions, whether you be a member of Earnings Beats, a non-member, whatever, if you have some questions, I'll try to get to some of those in the last 10 or 15 minutes of my presentation. Then Bill's going to join at 11. And when he joins, I'm going to kind of moderate with him. He's going to go through all of his scans and so forth, but I'm going to be following the questions in the room. Maybe we'll banter back and forth on some techniques and so forth of scanning, but he's going to give you his expertise, which I think is going to be invaluable. And he'll go through some of those scanning strategies, his tips and tricks. He gets a lot of questions at stock charts. How do I do this? How do I do that? So one of the things I talked to him about was maybe he could touch on some of those frequently asked questions. So maybe give all of our members and all the folks here with us today an opportunity to hear from the scanning guru himself. And then we'll go through a list of questions and try to get through as many as we can. Last time we had Bill on, there was a ton of questions. I'm sure there are going to be a ton of questions today, and I will try to summarize them or try to group them as best I can, because he's not going to have time to go through and answer each individual question. So if there's a lot of questions dealing with moving averages, or how do you do something from 3 weeks ago, or I'll try to group those in as best I can. But that's the schedule, the slate for today. As John said, this is being recorded. I know some of you, 2 hours is a long webinar. Some of you would like for it to go 8 hours. Everybody's different. If you've got a schedule, you got things to do, and you can't stick around for the 2 hours, don't worry. It's all being recorded. It's being recorded right now. I can see the red light, so I know it's being recorded, and everyone will get a copy. So you can, if you want to listen to it over the weekend periodically, or a few sections, or you just want to listen to Bill, or you want to hear about our research products, whatever it is, you can come back and check that out later. All right, so let's go ahead and jump in. I'm going to get into the recent market action. And the first thing I want to do is I'm going to share my screen here. I always like to start with this chart, because I think it's important you understand where I'm coming from when I talk about the market and I say, well, this is worrying me, so forth. Keep it in perspective. I am very, very bullish the stock market. I think that the pandemic is creating opportunities. It's also creating a lot of fear and panic in the market. And so we have to take it for what it's worth. I've never been through a pandemic before. And unless you all are over 100 years old, you haven't been through one either. Not like the one we're experiencing right now. It really goes back to the 1917, 1918 time frame. So this is new. I mean, this is uncharted territory. You know, if you say, well, what should I do? You know, the virus is picking up. I don't know. Honestly, I watch the charts. I try to figure out what Wall Street's saying, and we go from there. What I can say is this: when you look at this long-term chart, you go through periods where you have secular bear markets. We go nowhere for a dozen years, sometimes even a little bit longer. But you can see this sideways action, the red shaded areas. Those are secular bear markets where over a dozen years, from 2000 to 2012, we averaged going up 1.5% a year. Now, that's the average over the entire period. Obviously, there were some really brutal periods in here, including the dot-com bubble, 2000 to 2002. Then we had the financial crisis, 2007 to 2009. You know, we weren't going up 1.55% every year. It was an average. But once you break out of these periods where the market doesn't go anywhere, we play catch up. And those catch up periods are secular bull markets where you go up most of the period. And the last two have lasted about 2 decades. I believe we're in about year 7 right now of a secular bull market. So big picture, I really like the stock market. I've been writing about it at Stock Charts. If you follow me there, either through Trading Places or on Chart Watchers, you know, I don't know if I can be any clearer about how bullish I am. I'm probably the only person you read back in middle March that said I'm bullish, but I'm bullish. I think the market is going to handle whatever is thrown at it. Doesn't mean we're not going to go down. You know, in 2018, we had the trade war. We lost 20% in a month, 3 months, whatever it was. Back in March and April, we lost 35% on the S&P 500 in 30 days, under 30, 4 weeks, whatever it was. We're sitting at an all-time high. The market goes through it. It's not an extended selling like we saw back during these secular bear markets. A perfect example is back in the last secular bull market, 1980 to 2000. There's your 1987 market crash. That right there doesn't look nearly as bad as all this, does it? I don't think so. But I lived through it and I was investing in it. And I can tell you that was one of the scariest times of my life was 1987 from a financial perspective. It doesn't mean it's not scary, but when you're in a secular bull market, you rally from those lows. And that's what I believe we're in right now. So keep that in mind as we talk about everything in this particular webinar. Because I'm a little nervous right now, and the market normally does very well in the fourth quarter. Historically, we do very well, but there are reasons to be a little bit nervous, and I'm going to go through those with you in just a second. First, I want to just point out, though, if we're looking at the ETFs that track the NASDAQ 100 and the S&P 500, here is the QQQ. Now, one of the problems I have, if you looked back in March, what you were seeing was gap downs in the morning. Everybody was panicked. You know, Dow down 1,700 points one day, 1,100 points next day, and every day it was just wearing on everyone. But you would see gap downs in the morning, and many days we saw recoveries. And I'm going to show you on an Excel spreadsheet in a minute how I can quantify. I mean, it's not just visually, because when you're looking at the chart visually, and we could go back, I don't know if it'll let me go back as far as I need to. Yeah. So when you're looking at this visually back in February and March, probably you were just looking at it, my gosh, the market's selling off. It's horrible. Well, there was a lot of buying that was taking place. There was a lot of accumulation that took place back then that really didn't show up in price action if you're just looking at the big picture of the market. Well, similarly, when we're going up here, a lot of this movement to the upside has been gap ups and then selling. And so I'm a little nervous in the near term about exactly what Wall Street's doing here. I'm following rotation, but I'm also following the fact that we're getting most of our strength at the open or in the morning hours, and then selling off in the afternoon. So if we go back again and look at that 1 hour chart, 1 month, 1 hour chart, you can kind of see here from the bottom, look at this gap up, sell off. First hour and a half up, back down. First couple hours up, tail off. Big gap, and this was a big gap up over here. Big gap up here. Really don't follow through. One of the few days was actually when we went down quickly on November 6th, which was Friday, and then rallied back. That was one of the few bullish days where we've seen a lot of buying throughout the day. Look at the 9th. This is the vaccine news, and this is huge because it has the potential of really changing the rotation in the market. And we've been, pretty spot on in terms of where the money's been going over the last several months. It's helped our portfolios crush the S&P 500. But if you notice, we gap up on the vaccine news and then we sell off. And the gap up is even more pronounced on the 9th on the S&P. Look at the spider gapping up and then look at the sell off. And so this has been like the theme. And I want to show you, let me see if I can, hold on one second. I'm going to bring up this chart that I think will help to explain this. So let me move this and bring this up. Okay, so now this is the Excel spreadsheet that I did. Now I'm going to take you back to February 19th through April 16th. This is the spider. So every day what I did is I took the closing price and then had the opening price for each day since the 19th, or from February 19th all the way through April 16th. And I was just breaking it down by periods, but I also do it in total. The whole idea, what I noticed was we were seeing a lot of gap downs, but then during the day, we really weren't doing that badly. So if you look at this first initial move, February 19th to March 23rd, that's when we put the bottom in. The gap downs accounted for 94 points on the S&P 500. During the day, it went down another 19. So you can see roughly, I don't know, what is that, 80 some percent of the move was on the gaps. When we look back at the 2008 financial crisis, 84% of the drop, and I think this is when the whole Lehman Brothers thing went down, Bear Stearns, all that, but it was like September 22nd to about October 20th. It was about the same number of days. The S&P 500 dropped, 27% in about 4 weeks. And I did this same calculation back then. And what I found back then is that the opening gaps only accounted for about 15% of the selling, whereas during the day, we saw 85% of the selling. In February and March, it was almost the exact opposite. We were gapping down, but we weren't selling off during the day. And the key here is, if you're an institution and you've got millions of shares and you want to get out of them, how do you get out of them if you're gapping down? I mean, the only way for institutions to sell is to sell during the day. You can't put a market order in for 1 million shares. It's just not possible with our current market maker system. Market makers aren't going to take the other side of that trade. So it's a process that you have to go through in terms of institutional buying and selling. It happens during the day. It doesn't happen after hours. It's not liquid enough. It has to happen during the day. In 2007, 2008, there was distribution. There was selling during the day. February and March, there was not. That was a big difference. And when I went through this entire process from February 19th to April 16th, the spider dropped 17% at the opening bell if you net it all out. During the day, you went up 4%. So essentially what I ended up doing was saying, let's say you had $100,000 to start and you buy every day at the opening bell and you sell at the closing bell. So you don't hold overnight. Your 100,000 on February 19th or 20th at the open would have grown to 106,000 by April 16th. You see where I'm saying here? There was accumulation. Now, there were some areas of the market that sold off. Airlines got killed. Cruise lines got killed. Hotels, gambling stocks, many of the REITs, the real estate area. All of those areas got crushed. They not only gapped down, but they kept selling off during the day. There was distribution. Warren Buffett famously said, I've sold all of my airlines. All of them, every single share he sold of airlines. How did he do that? during the day. He sold off. That's why when you look at the airlines chart, it was going down throughout the day. It wasn't just gapping down. Other areas, though, broadline retail, where you got a lot of online retailers, they were gapping down, but they were being bought during the day. So you had to see that rotation. And that's one of the things I think we're really good at Earnings Beats, is not just following what they're talking about on CNBC. I never watch CNBC. I do my own research. I watch the charts. They tell me all I need to know. I don't need somebody to come on to CNBC to tell me what's going on in the market. You know, S&P 500 down 4% today. Thanks. All right, that didn't really help me. You got to really figure out what's going on beneath the surface. So this was what we were doing back in March and April, guiding our members to position themselves in the stocks that were actually being accumulated and staying the heck away from stocks that were not being accumulated, that were being sold, being distributed. And so that was what we did back then. Now I'm going to fast forward to what I've seen over the last 2 weeks. This is the spider at October 30th. Now, since October 30th, by the way, we have gone up, I want to say, over 8% on the S&P 500. Well, I can tell you we've gone up 8% here on gap ups. So if you take, or no, excuse me, 8.17% is the difference in the spider. So 8.17% means we've gone up in less than 2 weeks since the October 30th low of 8.17%. But look at what's happened during the day, intraday. So we've gone up 31 points at the open, but we've lost 5 points during the day. That's the exact opposite of what we saw back in March and April. Now, again, all of this is within the confines of a secular bull market, in my view. If we were in a secular bear market, I would be pounding the table to sell and get the heck out of this market right now, based on what I'm seeing. Now, I think that there's some rotation going on. I think this is going to play out over the next couple of weeks to a month. So I think it's a little early to be making any kind of major calls based on this. But I find it very interesting that we are moving right back up. And like I showed you on that hourly chart, morning strength, afternoon weakness, gap ups, failure to extend those gains. That's been the theme of the last 2 weeks. Now we're consolidating, but I'm going to be watching, because if we break out and continue to do this without accumulation, I'm going to be nervous about this rally. I want to see that. I want to see accumulation and buying throughout the rally. I also want to see where the money is rotating. I'm going to be going through all 104 industry groups over the weekend to find out during these last couple of weeks what areas are being sold off, which areas are being accumulated, just like I did back in March and April. And that's going to be one of the things I'm going to be reviewing when we pick our stocks for our portfolios next Thursday. That's where we have 10 equal weighted stocks, 10 leading stocks and 10 leading industry groups. That's what we strive to put together in each of those portfolios. And part of this is going to be the rotation that I'm seeing taking place. So a lot of this rotation I'm going to be talking about on Monday in that Monday webinar, one of the webinars John was talking about. I think it's going to be extremely important for trading as we go forward. It's going to be very important to understand what Wall Street is doing. A lot of folks think Wall Street, is crooked. And so if you follow what they're doing, they're basically telling you what they're buying and what they're not buying. They're the ones that have all the PhDs and the MBAs and so forth that they rely on to make these decisions. It's a very smart group. They're able to go out and meet with management teams, find out what's going on at the company level, the industry level, and then go back to their offices, the Goldman Sachs of the world, and buy, not just for their clients, but for themselves. It all shows up in the price chart. Don't listen to what people are saying on CNBC. Listen to what the charts and the numbers are telling you. Anyway, so that's going to be our Monday webinar, looking at this rotation and trying to gain some insight to make more educated decisions about where we want to invest, where we want to trade. That's going to be the theme on Monday. So I don't want to spend any more time on it now, but I can just tell you that when you look at the spider and when you look at the QQQ, because I did the same thing for the QQQ, you can see QQQ up 21.66 points over these last couple weeks, less than 2 weeks. But during the day, there's been no accumulation. We've actually fallen on a net basis during the day. So, we had major news come out on the vaccine, but after that gap up, we haven't been able to clear that high at the open. That's going to be an important level from a technical perspective. I want to see us get back through that open on Monday. And I also want to see money continue to rotate into the QQQ versus the spider, into growth versus value. Those are things that we're going to be evaluating and looking at. All right, so I'm going to move on now. I want to move on to the research and scanning strategies. So let me get rid of this chart. And again, I know some of you are very familiar with what we do, your members here at Earnings Beats, but we have a lot of folks that aren't. So some of this is going to be a little repetitive maybe for our members. But I also think you're probably going to pick up some things. I know one thing in particular that you have not seen that I will be unveiling here in just a couple minutes. But first, what I want to do is just talk a little bit about what we do. So if you go over to Earnings Beats, and let me see if I can get this set up for you. Here you go. So one of the pages at Earnings Beats is our chart list, and this is really the engine of our research. This page, chart lists, is where we keep a lot of our research. So we organize it in chart lists. Now, this particular stock charts account that I'm in right now, I deliberately did not update it with some of the recent chart lists. And I want to run scans from those chart lists. So I want to make sure that I have the most recent. So anybody who's new will get an opportunity to see just how quickly, if you're an extra member or a pro member at Stock Charts, and you're also become a member at Earnings Beats, I want to show you what you can do here. So the strong earnings chart list, this list contains 496 companies that have beaten Wall Street consensus estimates as to both revenues and earnings. They're liquid, meaning that they average trading at least 200,000 shares a day. And in my opinion, there's something about their technical charts I like. Either they're strong, which sometimes just jumps off the chart at you, or it could be a stock that maybe is not doing, great versus its peers, but its peers are doing very well. So it's just in a strong group. In other words, over the last several months, software stocks, semiconductors, computer hardware. If you've been a decent company in those areas, you've probably been added to this chart list if, in fact, you beat your estimates, revenue and earnings estimates. So what I wanted to do here is, here's the password. So what you want to do if you're downloading this list is copy this password, which I am doing now, clicking on this link, and then typing in the password. So I'm just copy and pasting it. Unlock the list. Now I've got the 496, but I haven't. If you're not a member at Stock Charts, this is what you would get. You could scroll through these one at a time, but there's 496 of them. It's worth the membership over at Stock Charts. Now, with a membership, I can save to the chart list. I'm going to save this to, I'm going to replace a list. I've already got a strong earnings chart list, but we update this periodically, usually once every week or two. And so now I'm going to go into my strong earnings chart list, and I'm going to save the results. I'm going to leave this checked. This includes our chart style. So exactly what you see, it saves our annotations. And so I'm going to save results. Now, because this is a very big chart list, 496 charts, it'll probably take a little bit longer than some of the others, but usually 10, 15 seconds for a download, and it's done. So we'll see. I didn't put a stopwatch on it, but some of the others they don't have as many charts, so they will take less time. But all the research that goes into this was just downloaded into this account in, 15 seconds maybe? Pretty impressive. So I'm going to get out of here, and I'm going to go back over to chart lists, because that's now the strong earnings chart list, 496 companies. All the research I did that took me literally 100 hours, maybe more, maybe a couple hundred hours. I don't know. A lot of work I put into it is literally downloaded into your account in 15 seconds. Next one I want to do is the strong future earnings chart list. Now, the strong future earnings chart list takes a little bit different look at the market. It looks from a relative strength standpoint. So I want to get the stocks that have the best relative strength in and are liquid. And then I put them into this chart list with one caveat, and that is that they're not already on the strong earnings chart list. So the strong earnings are companies that have come out with earnings. They've beaten Wall Street estimates. They're liquid. They look good on the chart technically. And strong future earnings start with relative strength. But if they've also had strong earnings and they're already on the strong earnings chart list, then I delete them off of here. So essentially, let's say you're a really good company, Amazon, some great company, been really solid technically, but you missed your earnings recently. But Wall Street still loves you, and you're still a great relative strength. You have great relative strength numbers. You're going to find those on the strong future earnings chart list. So I'm going to copy my password, click on the link, paste the password, unlock the list, save to chart list, replace list, go into my strong future earnings, save results. There you go. That's how fast that was. Let's get rid of that, get rid of that. And so there's two of them. Now the strong future earnings, that's 167 companies. That's why that one loaded a little bit faster. The last one I want to do is the raised guidance chart list. Actually, this came from a couple of members. They wrote in, they're like, you always concentrate on beating revenue and earnings estimates. Do you ever consider companies that are raising their guidance? Well, here you go, raised guidance chart list. So this was updated as of November 9th. I think it ran through maybe November 6th, raised guidance. So I've got to update that for last week's companies that raised guidance or this week's. But let me go ahead and copy that. I mean, it's just so easy to do this. And then when you go to scan, I'm doing this so when I go to scan, I have the latest information in these chart lists. So I'm going to save to the chart list, replace list, come down to my raised guidance chart list, save results. Okay, so those are three. Now, remember when I said back in February and March, we were gapping down, but then some companies were being accumulated during the day and some were being distributed? Well, that resulted in us creating our strong AD chart list, which, by the way, for members, this was just updated this morning. I literally just updated this morning. We now have 243 companies. This will show you the companies that basically are strong on a relative strength basis, and also their accumulation distribution line is essentially on the rise. And accumulation distribution, if you're unfamiliar with it, it is calculated based on, it ignores the gaps from yesterday's close to today's open. What it looks at is how you traded today and where you finished the day. So if you open down from let's say you got a stock that's trading at 200 and you open at 160, huge gap down, but then you come up and you trade up to 190, and that was the high of the day. All of that volume is considered bullish. It's considered as though there was accumulation. Even though yesterday we closed at 200, today we're closing at 190. We opened at 160, we moved up to 190. We went down $10, but AD line went up. Why did it go up? Because it was being bought all day long. So it's a different way of looking at things. The on balance volume, if you've ever used that indicator, only looks at the 200 and the 190. You went down, OBV says all that volume is negative. AD line says all that volume is positive. You have to decide which one you agree with. I happen to like the accumulation distribution. When you have a divergence between the two, I think the AD line is more significant because it's telling you what's happening during the day. It's not influenced by the panicked opens that we see sometimes. So that's why I like the AD line. And we created two chart lists, and our best performing portfolio this quarter has been our strong AD portfolio. Every stock in that portfolio back on August 19th had very strong AD lines. And that's been, I mean, if you go over here, I'll show you. Here's our portfolio performance through yesterday's close. Strong AD this quarter is up 27%. The S&P 500 is up 4.8%. I think that's pretty decent outperformance. Our model portfolio, which has been killing, is up, 7% or 7 percentage points over the S&P 500, and it's volatile. I mean, we definitely have volatility, but that's in the market. I mean, we can't not have volatility unless we just want to buy treasuries, which is not really what we do. But these portfolios, these are the portfolios that we're going to be changing the stocks on Thursday. Again, one of those webinars that John talked about. So several big webinars next week. All right, I want to keep rolling here. So let's take a look at the chart list. So here's the strong AD chart list. Right now, we have 243 companies and just updated. So members, you can come in here and download that list. Weak AD, I haven't updated. Been a little while. I'll get to it. I'm not interested in shorting this market. And honestly, that's the only reason I would use the weak AD chart list is if I was going to short. I want to find companies that are being distributed, not being accumulated. So, but because we're in a secular bull market, members can certainly attest to this. I don't talk bearishly about too much in the market. Short term, if I'm a little nervous, moving a little bit to cash is fine. I am not going to short. I just don't think shorting is the way to go in a secular bull market. I think it's like swimming upstream. You're not going to swim nearly as fast if you're going upstream. All right, short squeeze chart list. So the short squeeze chart list is one of our favorites among members. It contains the 72 largest shorted companies in terms of short percentage versus their float. So if a company, and float is just the number of shares available to trade. So if a company's got 100,000 or 100 million shares available to trade and there's 20 million shorts, then their short percentage of float is 20%. Every stock on here is 20% or higher. Those are the only ones we include. And the chart list itself is in, let's just pull one up. So if you pull up the short squeeze chart list and we view all and hit the summary and then the name, put it in name order. Here is the highest shorted stocks, and there's their percentage of float right in the title. So all of this ahead of time. So if there's you could look at this and just see the most heavily shorted stocks. What are they doing today? Well, SKT is up almost 5%. Maybe we got a short squeeze going on. Well, recently we did have a nice breakout. There's probably a lot of nervous shorts on this stock right now. Those are the types of things that you can get out of the short squeeze chart list. The relative strength industry group chart list. Let me go back to chart list and show you this. This particular chart list, you need to be an annual member. Just because once you have it in your account, you have it. It doesn't change. There are a couple of industry groups right now that just recently changed a little bit in terms of their name and their ticker symbol. But other than that, I mean, mostly our industry groups are not going to change. So once you have this chart list, it's yours forever. And so literally someone coming in as a trial member could take this and go. And I don't know, I just think this is something that really, if you're going to be a committed member at Earnings Beats, that's, we'll send this one to you. And that's just the way, we approach it. But this chart list is golden. I'm going to pull it up for you very quickly. If you go into the relative strength industry group chart list, you can see this is in number order, but you also can quickly put it on a percentage change basis. And you can see that today aluminum is leading. That's the top performing industry group. Telecom equipment, second. Airlines, third. This is the hotel and lodging REIT, fourth. Retail REIT, I think, RL. Then we got an oil group, gambling. I can tell you right now, money is rotating back into the stocks that did not do well during the pandemic. And this is the rotation I'm talking about that we have to be very careful about right now. This is telling me the market is starting to favor those companies again So I can probably assure you that on the bottom of this chart list, before I even look, is probably going to be broadline retail, specialty retailers, maybe autos, maybe renewable energy. I mean, I don't know. Some of the groups that have been doing very well. Let's see what's losing. There's your autos, computer hardware, there's software, there's your broadline retail, internet. Here we go again. We're rotating back out. This is not great action in the market in the near term. Now, this doesn't mean that I think the market's going lower. I believe the stock market's going higher. The question is, what is going to lead this market? If it's going to be industrials and financials and energy and so forth and real estate, I want to know that. If it's not going to be technology and it's not going to be consumer discretionary, I mean, you can see XLY, XLK, XLK, XLY, XLY, XLY. Then throw in communication services, XLC, XLC. These are the three most aggressive groups, in my opinion, in the market. Those are the ones lagging today. How have they done over the last month? Well, we can pull it up. There you go. Last month on a relative basis, toys, that's consumer discretionary, consumer discretionary, consumer discretionary, top 5 groups, consumer discretionary. Right now, consumer discretionary is not in favor. Maybe we're going to break out in the overall market and money rotates back into these groups. But right now, that's a problem. So when I start to put these portfolios together, I'm going to be looking at this. I'm not going to necessarily want to weight a lot of our stock selections towards areas that are losing relative strength. I'm going to want to go with more areas that are showing relative strength. So we've got energy, materials, financials. There's one group in consumer discretionary, travel and tourism, which did not do well during the pandemic, coming back. Materials, energy. Now here's the hotels, which did not do well. Do you see, what's happening underneath the surface? This is the kind of stuff I think that's much more important. All right. One last thing I want to do here on these. I also want to show you seasonality, which is something that we just added. November seasonality chart list. This is a chart list of 20 companies that went through the entire S&P 500 and the NASDAQ 100. And we've got the 20 stocks that have the best track record in November. Now, before I even go there, I want to show you one other thing. This is new, even for members. You have not seen this. I think it's pretty cool. Here's a heat map. In fact, John Hopkins has not seen this. Nobody has seen this because I've just been working on it. But this is a heat map of sectors. Going across the top, you'll see the months. Going down the side here are your sectors. This is the average relative outperformance of that sector versus the S&P 500 over the last 20 years. And where you see dark green, that's telling you it's very bullish. So for instance, we're in November right now. Technology tends to love November. Consumer discretionary. Industrials has the best month relative to the S&P among our 5 aggressive sectors during the month of November. Materials, also very strong. Healthcare tends to be very strong. It's just another factor, another indicator that will help guide you from a seasonal perspective as we go throughout the year. Now, what I haven't done yet is I'm going to do this entire heat map on industry groups, which I think will be fascinating. So in other words, you're going to be able to say, okay, industrials really strong in November. Which groups in industrials? Well, when I finish that heat map on industry groups, you will see which groups within the industrials do extremely well. I can tell you that one of them is commercial vehicles and trucks. And that group looks exceptionally strong technically as well right now. So that's one of my favorite groups in the market right now. But let me go back and show you. All right, sorry, I can't find my. Oh, there it is. Okay, so let me go back and show you the. Go in here and look at seasonality. This is where I get all the data from. DJUSHR, commercial vehicles and trucks. So this is a 5-year. Last 5 years, it's gone up every year in November, and it's averaged going up 8.5%. But as we drag this all the way across for 20 years, 90% of November's commercial vehicles and trucks has gone higher. Look at the average return, 5.6%. I mean, you've got April 4.5%, but nothing else even close. This group loves November. So let's take a look at what's going on. Well, guess what? It's rising in November. Shouldn't be too much of a shocker. But knowing this information going into November would have been pretty handy because it's corroborating the overall technical picture of the commercial vehicles and trucks area. All right. The last 4 chart lists, and I'm not going to go through those, but next Thursday we'll be updating our 4 portfolios, model, aggressive, income, and strong AD. All right, let's move on to some scanning, and then we'll get into some questions. I'm just going to show you a couple of quick scans. There's also a page here at Earnings Beats, Scanning Strategies. And I can tell you, first thing, like in the morning now, 10:45, we're an hour and 15 minutes into the market. One of the things I like to do is pull up this high volume scan. So I'm just going to copy the syntax. And then I'm going to go over here, go to my dashboard. And I'm going to go to my high volumes. Well, I've already got it saved, but if you didn't already have it saved, you could just do this. Just type in, just put in here. There's the scan. Now, what this is going to do is it's going to find all the stocks in the market that have traded at least 40% of its volume today so far. Now, you might say, well, 40% of the volume, that's going to bring up just about every stock. No, because it's only looking in the first hour and 15 minutes. Now, normally I would run this around 10. So 10:45, we probably are going to have to do this. We're going to have to run this against more stocks. But let me show you if I just run this based on what I have right here. Check syntax just to make sure we're good. We are. We run the scan. Scan results, 999. Oh my gosh. Well, look at what it includes. It includes everything, not just what we have in the I mean, it's indexes, it's everything. We haven't specified. We're just saying that the volume is high. They're higher than 40% of normal. So that's why it's coming up with everything. So let's only scan our chart lists, which is what I always do. So now I've updated my chart list so I can bring on the strong earnings, add. I can go to the strong future earnings, add, and then I can go into my raised guidance and add. Now, if I run this just like this, it's going to come back 0. Let me check syntax and I'll show you why. Run the scan and up 0. So are you telling me no stock in these 3 chart lists have done 40% of their normal volume in the first hour and 15 minutes? No, this is a scan problem. Remember when I said strong earnings and strong future earnings are not going to have any common stocks? Well, what we're saying here in this scan is that not only do we have to have 40% of normal volume already have traded, but that stock has to be in each of these 3 chart lists. Well, it can't be in the strong earnings and strong future earnings, because when I do the strong future earnings, I take out all the stocks that are already in the strong future earnings. So that's why this isn't going to work this way. But what I can do is I can put in a bracket here. So I'm taking the volume over 40% of normal, and I'm going to take any of these 3. So I've got to use the or clause. So it's got to be in any of these. All right. And then I have to put a bracket at the end. Between these 2 brackets are the ors. So here's a list, or here's a list, or here's a list. These 3 lists. So the volume is greater than 40% of normal, and it's in one of these 3 chart lists. Now, this is still going to return a lot probably because volume is only at 40%. So let's check syntax. We're good to go. Let's run the scan. And we've got 36. That actually isn't as many as I thought over the 3 chart lists, but we can go back, and what we can do is just change this. Let's say 75%. That's a lot of volume in the first hour and 15 minutes. But that's what this high volume is for, is trying to capture those stocks that have really are, for whatever reason, are trading a lot of volume. So we're going to check the syntax. We're good. We're going to run the scan. And there's only 12. Now, this is probably, well, these are over the counter. That's probably on the raised guidance chart list. I normally don't do over the counter in my various chart lists. So I would personally ignore both of those. But I can pull these up. So I can replace an existing chart list. I'll just do this in scan results, high volume. Okay. And then I can look at these 10 per page. I can look at them real quick. So let's see what's interesting to me. So here's Celsius Holdings. Big volume. Of course, it had huge volume on a breakout yesterday. I like that chart. DraftKings. Look at DraftKings gapping up. They had earnings today. Stock reversing its recent downtrend. eGain selling off on big volume. Not interested. 5 Prime. Wow, something happened a few days ago. It continues to have big volume. Himax Technologies not really getting a breakout. Volume strong. MoneyGram, look at this thing continuing to go up. That's so the chart or the scan is just providing us, we already know that these stocks have relative strength because they're on our chart list. The research has already been done. So when we run these scans, we're not running it against the entire stock market universe at stock charts. We're only running it against our research and the companies that we would consider owning based on fundamentals, that strong earnings chart list, based on technicals, the strong future earnings chart list, fundamentals and technicals, raised guidance chart list, and any of the other chart lists that we have. You can run however you want. I'm going to show you one more scan. I won't do it today. Well, there's two I would show you. One is, I love this scan, which is our downtrend reversal scan. Finding companies that are technically strong that have gone down and printed lower highs for 5 consecutive days and now are putting in a higher high can sometimes catch a reversal right on the button. And so this is the scan to do that. But what I want to do is I'm going to go over here and just show you again. Let's go back. And so let's say you want to know companies that not only reported strong earnings, but also, I usually, and by the way, when I'm scanning against my chart list, I take out the volume parameters and stock because I don't have an issue with volume or it wouldn't be on our chart list to begin with. So I just get rid of all that. But let's say, I want to know companies that have met all of our criteria for the strong earnings chart list. So let's pull up strong earnings chart list, add, but also have raised guidance. And so add. And so let's just see which companies are on both of our lists. And that's it. This is all you have to do to run a scan. You can check syntax, but it's going to be fine. And then you run your scan. Which companies are strong earners and raised guidance? And, oh, here it is. Nope. Oh, there's scan results. Got 112 of them. That's a pretty good group. Okay, so let's go back and I'm gonna do one more thing and I'm gonna wrap up and see if we can take a couple questions. Let's add to this in order to further, let's make the scooter. Let's add the scooter. This is the stock charts technical rank. And right now it's greater than 90. Yeah, let's leave it at greater than 90. Let's see. So we've got to have really good relative strength. Strong earnings, they've raised guidance, and they've got strong relative strength. Run the scan. Well, now we're down to 25. And I could sort this in scooter order. And so I could have lowered the filter to 95 and it would have cut it off right here. But, you can start to take a look at what areas of the market are on this list. Communication services, there's an industrial. I can tell you, if I did this a month ago, 2 months ago, we would not have been seeing industrials on this list. We're starting to see more and more industrials. And I know John is going to be writing in the Chart Watchers this weekend about industrials and the fact that they have, really started to move up in terms of strength, at least the way we evaluate it here at Earnings Beats. And you can see it right here on this scan. I mean, industrial. So if we sort it by sector, you can see 5 of them on the list in the industrials. Great scooter scores. So anyway, that's just, some of the things that you can do using our research, using our scanning strategies, and hopefully that gave you a little bit of insight. And originally I'd planned to do a little bit more on the scanning and so forth, and so I do apologize, but I felt like with the change with the vaccine news coming out on Monday, it really was important that we communicated a little bit on this recent market action and the rotation of what's taking place. Now, there's a lot more to talk about in terms of rotation, and we're going to do that on Monday. If you want to be a part of that, it's very simple. Just go into our homepage and click on the Join Today button. It's if you fill this out, you'll get 30 days. You'll pay $7. We will refund you the $7 within 5 to 10 business days. So right here, you can see if I could. It's not going to let me highlight it, but right here, all trials are fully refunded within 5 to 10 business days. So you won't have any cost for 30 days. If you're not a Stock Charts member, they have a 30-day free trial. Do both of them and tell me what you think in a month, and tell me what you think about your results in a month and how confident you are about approaching the market in a month. I think it'll change the way you look at the market. But let's go on. John, you got questions?
A couple of questions here. Is there a way to scan the industry relative strength list that we provide to annual members? For example, can you scan the list to find those with ratios above their 50-day SMA?
That's a really good question. You know
Yeah.
what? That's going to be for Bill Shelby, because I don't know. I've tried to run scans on a relative strength chart list where we don't have, for instance, on this chart list, and I didn't show you all this. Figures, that's the one. There's 3 that have changed. That was one. Coal has changed. But let's pull up aluminum here. So I guess the question is, and what would be nice is if we could maybe scan for crossovers of moving averages or maybe percentages above moving averages. But this is not a chart of aluminum. It's a chart of aluminum divided by the S&P 500. And I don't know the answer. I've tried to run scans and I haven't been able to get it to work on the relative strength chart list. But I like to just pull it up. I mean, I can generally get a pretty good sense from just looking at that summary and changing the period. I mean, if you go back and look over the last 6 months and you look, here's aluminum, non-ferrous metals, automobiles, renewable energy, delivery services. There's your delivery services. Look at that move over the last 6 months on a relative basis. So you can kind of get what you want, I think, just by using the summary form of the chart list. But maybe if you remember that one, John, let's ask Bill at the end of his segment.
Okay, how can you place on a scan stock above 8 EMA in 2 days? I'm not sure what this is asking. Something about how you place a scan stock above, it says 8 EMA 2 days ago. Was there something that, I'm not sure what that one is. Let's try another one. Yeah.
Well, I can go through and take a look at it, while Bill's doing his presentation, and maybe that sounds like it's probably more of a question for Bill anyway.
Yeah, right. So maybe you can look at these questions during Bill's talk and just answer them. You can just respond directly to, because it's time for Bill to come in soon, right?
Yep, it is. We're just about 1 or 2 minutes away.
All right.
I guess, Bill, if you're there, we'll go ahead and move into your segment. Let me see if he's not here. I'll let's see. Yeah, I'm not. Hold on 1 second. All right, I'm going to stop share for just a second. And so let me see. He might need to be promoted, John. Has anybody looked?
Okay. Yeah. Hold on a second.
Yeah, he's there. You just need to promote him. He's first one on the list. Somebody, Abby, or I figured he was there. He's raising his hand. I tell you, we are so excited. I'm always excited to have Bill with us because Bill, we go back quite a ways. I was thinking about this morning. I think we got you now, Bill. Welcome.
Howdy.
There he is.
There I am.
Yeah, I was thinking about this morning. I was trying to think back when the first time I met you. Was it ChartCon in 2011?
Could have been. Yeah, I don't remember. It's been a while.
Well, that was the first time that I actually went out to Seattle. So I'm thinking that had to have been the first time that we met.
Yeah, that probably would have been it.
Yeah, one of those Seattle hotels, Red Lion maybe, or?
Yes, that's where the first ChartCon was, right downtown above the Elephant and Castle.
Yeah. So that's been 9 years.
Yes.
You guys are talking like the ancient days.
Yes.
Events in hotels, people together.
Yes, exactly.
Maskless.
Pining for a crowd.
Yeah. This is welcome, Bill. Great to have you.
Thank you.
Yeah, those were the days where you could get in people's faces and not worry about it, right?
Shake someone's hand.
Exactly. Yeah, now we're doing a virtual shake. But it is awesome to have you on here, and it has been 9 years. I can't believe it's been 9 years since I started writing at Stock Charts in 2006, but I don't think that we had any reason to communicate until 2011, from what I recall. But
no, I started in 2010. So.
Oh, I thought you were there before that.
No,
I thought you were early on.
I was a user before I started working there. So I had been a user since about 2007 or 8 or somewhere in that range.
Okay. But you came over from Microsoft, right?
I used to work with Chip, the owner of Stock Charts, and way back in the days in the 80s and 90s at Microsoft. And then we kind of separated, and a couple of mutual friends found out that I was writing my own stock pickings software, and he found out about it and said, "Hey, come to Stock Charts." I didn't know he owned it, but I was a member for 3 or 4 years. I lost track of what he was doing. It turned out he owned it. So that's how that happened.
Yeah, that's a pretty funny story. All right, well, we're going to get into your presentation. I know, first of all, again, thank you for coming in. This is really a treat for me and for John and for all of our members to have you in, and all the viewers, because there are a lot of folks here that are not members.
Sure.
Earnings Beats. So just folks wanting to learn more about scanning. So what do you have for us today?
I'll go ahead and share the screen. Make sure that that's all working. See if you got my screen there.
Yep, I got you.
Okay. Well, you and I had talked a little bit last week or a couple weeks ago about some ideas, including things like maybe how to scan for short-term breakouts, short-term pullbacks. And then we had talked a little bit earlier in the week about trying to find doing some scans to find stocks that maybe taken advantage of this little pop we've had since Pfizer made their announcement about their vaccine trial results. So I thought I would just run through that, and you sent me this morning some of your lists, so we'll try and scan some of those. I joined about 10 minutes ago, so I saw you were doing some scans on your earnings lists as well. So that's sort of the plan. So we can dive right in. And I guess Tom, if you have questions along the way, we can kind of just chat about what we're thinking, and maybe we can modify our scans and just kind of as we always do, we wing it because that's the way we work.
Well, yeah, and I think with scanning, actually, that's about the only way to go, right? I mean,
it is a lot of tinkering. It's a lot of like, well, that didn't work, or it worked sort of, but I really want a bit more of that. I mean, you're sort of in the kitchen, it's the recipe. You throw a little bit more of this in, or a little bit, it kind of grows organically, and it's a lot of trial and error until you find kind of the sweet spot. So yeah, there's a lot of that.
Well, you were probably in the room. You probably heard me stumbling all over that into the relative strength question that had come in maybe before you even get into it. Is there a way to scan when you have a relative strength chart list like the one I was showing? Did you see that?
Yes, I saw that. Technically, no, there's a ratio. I mean, the scan engine doesn't support ratios like you had mentioned in your, you were talking about that list, that in that list, it's a ratio of the industry to, in that case, the S&P. So we can't scan directly, but I, like you, and I'm an investor, and I wanted to be able to do this. So I wrote something a couple years ago, a new indicator called percent relative. And what percent relative does is it takes a symbol and it says, find me items that, in this case, okay, this says take 20 periods, which is daily if you don't specify weekly or monthly. Over the last 20 periods, find me something that's basically outperforming the S&P, SPX. This is number of percent. So if I want to say, find me something that's outperforming the S&P by 10%, this will do it. Because I used to have to do these scans where I'd say, okay, go to a perf chart, find your time frame, month, year, 6, whatever, see what the change in the S&P 500 was. And then you could come down and use percent change and say, take the number that you did from your other research, say it was 6.7, and that's how you could find something was outperforming. But you had to go to do these couple of steps to basically find what the thing was, the percentage that you were looking for. I thought that's kind of tedious. So I decided that this would be really cool to just be able to put in a symbol and say, okay, find me everything that's outperforming this symbol.
That is really cool. So let's say we looked at, industrials and they bottomed 9 days ago. You could literally pull up the percent relative, put in 9, and then put in dollar, or just put in XLI, or do you need?
Yeah. Mm-hmm.
Okay. So, but is that going to be 20 days? Is that looking
20
back
days over? Yeah, that's over 20 days of a time frame. So it's going to take all the stocks that we're looking for, and it's going to compare them to the performance of XLI over 9 days. And if we're 9% over that, we'll get a hit.
Okay, but in order to look, okay, let me think.
But then if you want, what you can also do is, like you said, like say you've got a group. We could limit it to the Dow Jones Industries in the first place.
Right.
And we can do something like that. Another thing that's kind of interesting, if you're looking for individual stocks, what I put in is you can put in industry or sector, and this will allow you to find items that are outperforming their own industry or their own sector. The scan engine will go out and say, okay, I'm looking at Apple. So what's Apple's industry? Whether it's computer services or computer hardware. I'll say, okay, now take the performance of computer hardware over 9 days and see if Apple is above it, or if its sector was
awesome.
Yes, this allows you to do outperformance. I mean, the people who use this a lot see this and their eyes light up because they get it. I was talking to Dave Keller before the lockdown, whatever that was, like 10 months ago or something. And I was talking to him and Chip, and I mentioned this, and Chip was thinking, that's cool. And Dave about passed out. And I said, yeah, if you get it, you get it. You really do get it. So this allows you to basically say, show me everything that's outperforming my own sector or my own industry. So this is really, really powerful if you know how to use it.
That is fantastic. I didn't know that.
Yeah,
members, you're going to be seeing some more of that, because that's actually what I was, because when I said the XLI is going to, and if you I take my strong earnings chart list, it's going to take every individual stock and compare it to the industrials, and I didn't want to do that. I wanted to take the industrials to the industrials. You know what I mean?
Right.
And so this solves that.
Yeah. So what you could do if you want to do industrials, maybe we can do something like.
Can you pull up my chart list that you sent, like the strong earnings chart list?
Sure. Let's see here. This is my big mess of test data here. Let's see. Which one do you want to look at? Where we are? Oh, there we go. Let's see.
Yeah, the first one, that's strong earning. Yeah, or no, back down where you were, 0300. That one was better. That's going to be the more recent. I think the other one was probably when we did it last time. Maybe, I don't know.
Could be. I may have a stale list. We'll see, but we'll just see what happens.
Okay. Yeah, maybe you should decide what's in your account instead of me.
Yeah. Actually, we can do one of the ones you just sent me. I think that was.
Okay, I probably picked the wrong one.
Yeah, November 9th. So we'll do.
Oh, okay.
So these are ones that are outperforming their industry by 9% over the last month.
Wow. 123 of them? 120, that's a lot, but there were 496 charts on that chart list, I think. So roughly 1 out of 4. I guess maybe that probably makes sense.
Yeah, so that's how I was, because I wanted to do the same thing for years about finding a way to do relative performance, and the scan engine doesn't do ratios per se. So I had kind of come up with this as an alternate method. And I remember years back, I had wanted to be able to chart ratios. If you follow Gaddis Rose at all, he's got this chart that he uses that tracks performance relative to its industry and relative to its sector and whatnot. And I wanted to do that years ago. So I worked here to get us to be able to put dollar industry and dollar sector into the workbench, so you can actually chart those. So a lot of his charts was stuff that I had helped him come up with and implemented here years ago. But it's one of those hidden gems. There's a lot of things out there, and sometimes you don't run across them.
Yeah.
So that's how to do the relative performance. It's very cool.
Yeah, I'm going to be using that one again for sure. There's no doubt.
All right.
I've got things spinning around in my head now.
I've just ruined your weekend, did I?
Hey,
Yeah,
Bill.
yeah.
Hey, Bill.
I probably used it all weekend.
Yes, John.
Bill, just send me your resume, please.
Okay. Very good. All right.
Yeah, that's awesome.
So let's, I threw a few things together. We can try and play with looking at some short-term breakouts. So you can see here, I'm using the comment feature. This allows us to sort of turn things on and off when we want to, as opposed to having to save multiple different scans. Is another trick I use if I want to be able to turn something on and off. We use these little forward slashes to comment things out. We can also use the hash symbol. And it basically just means scan engine, ignore this line, or scan engine, pay attention to this line. As you can see here, so I can very quickly say, okay, I don't want every stock. I just want the strong AD stock. So this allows me to play with a number of different levers and dials without having to constantly type them in. So if you have a scan where you're sort of constantly looking at, say, different sectors, you may want to type all the sectors in and just turn on and off which ones you want. So that's sort of a little cheat thing I use. So for breakouts, what I typically do is I'll look for a high. What we're doing here is looking for a 1 month high. Again, we're looking at daily. The 22 here is basically 22 days, and it's an average of the number of trading days in a month. It'll vary a little bit depending upon how the dates fall and if we have holidays, et cetera, but 22, 23 is a pretty good average. So I'm just looking for a 1 month range. And then as you were talking about, Tom, one of your scans, just before as I came in, you were looking at volume. And so what I'm going to do here is say, I want to find stocks that over the last 60 days, so that's almost 3 months. I know, Tom, you guys look at a lot of quarterly data because everything's large, earnings. So that's on a quarterly cadence. So maybe we'll look at roughly 3 months worth of volume. And let's find things that are breaking out on high volume. So I'm looking at 40% more volume than the average over the last 60 days. So we can run that scan. And this is all the stocks in the US. So we're obviously getting a fair number of them. I think people are pretty familiar with the scan results since you've been using them a lot. I'll go into a couple little things here in a minute as we evolve this scan. So this is sort of our base scan. You can start to see that over the last week, yes, we've seen a breakout here. We've got some rising volume, especially yesterday. This was a scan run as of the end of day yesterday, so we're kind of ignoring this little tiny bit of volume here. And the price drop, of course, we're looking at a penny stock there. We can make some changes for that if we want. So another way we can look at some outperformance and some breakouts is to look at our Bollinger Band. And let's put a bit of a filter here. Look at $10 stocks. And now we're going to put a a Bollinger Band extra criteria onto that. So now we're down to significantly less. We're down to 23. We've weeded out a lot of the little penny stocks. We can do that. One of the features I'll show you that not a lot of people know about is this guy here, Sharp Chart with scan indicators. Obviously, you know about clicking here. This will bring up your default chart over here. But this guy, what it'll try to do is look at the scan and find the items that are in your scan and put those on the chart. So here we were talking about a Bollinger. So it said, oh, you've got a Bollinger. So I'm going to put a Bollinger on the chart, even if it's not on your default chart. Not all the indicators will come through that way, but a lot of the really common ones do. So sometimes when I'm looking at indicators that I don't have on my normal charts, I'll click that link and see if it can give me what I'm looking for. So here again, we can see we've got pretty good breakout. We've popped over our Bollinger Band. We've got some strong volume. So this is another way to sort of look at some short-term breakouts.
Mm-hmm.
We can go back and, we've talked about RSI before, so we can add this. We'll see it as we add more criteria. Of course, we're going to whittle our list down. Eventually, we're going to get so specific, we'll come up with nothing. Then you kind of got to take your foot off the gas, get a little bit more room. We'll see if there's any that actually fit both of those criteria. Yeah, we're some down to 8. There's you're talking about Celsius. So now we've got RSI and so we've got a strong breakout. We popped over the Bollinger Band. We got good volume and we've crossed over the 70 threshold or into an overbought. Now, some people will sort of say that's maybe where they want to stop. I know, Tom, when you see some stuff that's really overbought, you would tend to like to see a bit of a pullback. So we'll look at that in a minute. But other people who are more of a momentum may say, great, it's crossed 70. It's going out the door. It's not up to this range. It's not up to 90. So maybe I've just caught it on a good bit of momentum here. So again, Scan Engine, the nice thing about it is you can dial this number into anything you want. If you really want to say, let's just look for something that's crossed the midpoint. We're getting even fewer. So we've got some things that have kind of gone completely nuts there. Jaws acquisition. And you talked about scooters. This is it's a different sort of relative strength. This is a relative strength within a large group, the stock chart's technical rank. And 90, it's similar to RSI in that it's a scale from 0 to 100. The highest scooter is 99.9, so it's basically 100. So this will basically catch everything in the top 10% of the relative strength. And again, we're using a smaller list, so we're getting smaller and smaller results, but Regeneron is another one that's had a breakout, stronger volume, and it's crossed above. Its relative strength has gone up above into the top 10%. In this case, it's probably, we can turn on full quote and see which actual, what we call a universe is here. This is a mid cap. So you can see which scooter universes. The scooters are broken in what we call universes, so they compare against each other. So we've got large caps, small caps, mid caps, ETFs, and then we'll use the entire country of, say, India or London as a separate group. So it depends on which group you're looking at to see which what the scooter applies to. So in this case, it's a mid cap.
Yeah, I know RGN's been a really strong biotech.
Mm-hmm. And so that was just sort of the my basic quick and dirty short-term breakout. You can use any number of other pieces that you can use, parabolic SARs, there's MACDs, there's all sorts of, in general, there's tons of different things, but these are some really basic scans that will do the job and find some really good breakouts. And at this point, you could also say, okay, let's look at our lists instead of the whole stock market. You can tailor this to whatever breadth of scope that you would really like.
One of the things that I like to use too, when when you're looking at, say, a 52-week high scan, is putting the scooter in there, filtering the scooter at under 80. So a lot of times stocks that are hitting 52-week highs have been doing it for a while, and so their scooter score is up in well into the 90s. When Tesla's on a roll, some of these other companies, Zoom, when it was flying, it kept hitting highs, but was 99.9 or whatever. The reason I like to use the scooter sometimes under 80 is just because you might be catching a breakout before that particular stock has really shown a lot of relative strength. So it may just be starting.
Right.
I didn't know if you ran anything like that where you try to get something that's breaking out, looks good, but maybe hasn't been.
Sure. I mean, one of the things you can, yeah, and that's exactly, and that's maybe why you want to look at crossing RSI 50 versus 70, right?
Right.
But I mentioned crossing, and I've got it here. So what we can do here is say X. That means X crossing above. So that will tell us everything that crossed above 80 yesterday. So that means if we do below 80, we're going to get the bottom of the barrel stuff as well. Crossing 80 means show me everything that literally went above 80 yesterday. So we can see here, yesterday's close, we went above 80. So that's what that crossing is, kind of a nice thing, because that's a bit more immediate. It says, okay, show me something that was below my level yesterday and is above my level today. That gets very specific to show me something that's just happened right now.
Yeah.
So that will save you a bit of time weeding through things that are below your value, but just never make it up there. They're bottom feeders and they're just sort of stuck. So that's a good way to find a bit more of the immediate things that are just changing right now.
Okay.
All right. So maybe we'll look at some pullbacks. We talked about EMAs. I know that's one of your favorite pullback scenarios. I've got your list here. I'll start with this. What this is going to do, again, I'm looking at about a 1 month. And what I'm going to do here is say, find me something that's above the 20 EMA, but it's less than 1.02, which means it's less than 2% above. So what I'm finding is a window between the 20 EMA and 2% above the 20% EMA. So I'm finding a band there that's pretty close. The close is less than it was a month ago, so it means we're off the high. We're still above the EMA, but we're within 2% of it. So it means we're lower and we're really close. So there, and this is your chart list. I'll have to go back and see what list 71 was. It was the strong earnings.
Okay.
So we got 20 of them that are coming down and are within a couple percent of the 20 EMA. And that was, remember, where this is running yesterday. So there is like right on it. Mm-hmm. So this will show things that have come off in the last month, but they're really close to the EMA. Whether they've gone below it and come back, or maybe they've just drifted down, we could probably tell if we wanted to put a little bit more criteria in. We may have a mix of things that have different behaviors there. Yeah, Nike came back up, came back down. That gets us within a pretty good range there.
Mm-hmm.
Well,
that's a good point. You could see on that 20-day right there on Nike, you could see, in the past when the stock has come down to that level on an uptrend many times, look back to September. I mean, that was perfect on Nike when it pulled back. And yeah, there on the shorter term chart, you can kind of see those tests right there. And now, I talked earlier too, Bill, about it. I don't know if you were in, but I was talking about a downtrend reversal scan that I like to use.
Yes.
Now, this wouldn't have met it because it only did it 3 days in a row. But if you look back to November 9th, and then the next 3 days, it had lower highs. And then now today it's showing a higher high. That's another one that I like. And having 5 days doesn't have as many stocks hit, but normally if it's a pretty good stock on a relative basis and it's been going down for 5 days in a row and it starts to reverse, it might be something to consider. But I like that as well.
Yeah. Another thing you can do is say, maybe you want to widen it. Oops. What this does, it says, we're going to look now basically for a 2% band above or below the 20 EMA. So this would allow us to say, okay, it's dipped below the 20 EMA, but not more than 2%. So we don't want something that's just completely tanked and fallen off the cliff, but we want to say something, well, it's kind of gone on it. Now we've almost doubled our number. There's one, of course, that was in our first bit, but we've basically widened it to allow, let's see here, we can find one so there's one that's a little bit below, but it's still pretty close. So this could be where you've had a pullback. It's gone a little bit below the 20 moving average. We can put that on our list. Now we want to monitor it to make sure that it doesn't continue to go down, but at least this will get you into a smaller, you get a group of stocks that may perform the way you want.
Yeah, and I think too, for those looking at pullbacks, I mean, if you look at this chart, Bill, back in April, May, June, as it was trending up, and that, this isn't maybe a scanning question, more just technical analysis point being made. But, moving averages are great when you're trending. But then if you look June or July across to October, or even to now, every time we've tested that 20, it hasn't really held. We've kind of been going up and above and below. So when you get a stock that's not trending, the moving averages don't really tend to do much for you. But when you're trending, like it was back in April and May, just about every one of the times it hit that 20-day moving average, it was a buy. And then you get the next breakout, you could sell, do whatever, wait for the next test, buy, and so forth. And it wasn't until you got into June, July is when it started to,
accumulate.
weak.
Yeah, sort of a channel there. Yeah. Yeah, I mean, you can use this as a great way to just alert yourself to something's getting near the 20, and if you think that's an interesting point where things happen, then you can take those results, put it into another scan list, their chart list, scan that for, an acceleration or a high volume or whatever additional criteria you'd like to put onto that. Let's see here. What else did I put in? We're talking about the RSI. Let's see, I'll turn this off in case we get too specific. So this is one where the RSI went below 50, but I do put this reserve on there to say, well, make sure it doesn't go completely through the basement floor. So we don't want something that went from 50 to 20. We'll try and at least something, we've got something that's come down below the 50 and it's trending right near it. So if this is your point of like trying to find something early, your scooter crossing above 80 or whatever, this is something that says, well, we've had our pullback action and we've come down below the median middle mark on 50 and we're near it. You can put additional clauses on there to say, okay, maybe try and find one that's popped down and gone back up. It can get a little tricky. The scan engine is very good at running scans at a particular date, and you can target a very specific date. What it's less able to do is say, find me something that's happened within a time frame. So find me something that's happened within these 10 days. We call this the within problem within the scan engine, because we can scan this day and this day and this day. We can't say batch up all 10 of those and run all 10 scans at once and give me an aggregate set of results. We can't do that. So it's harder to find longer trends without putting in specific criteria. So a lot of times the best we can do is just say, find things that are going over now or getting close now, put them into another chart list, and then do some subsequent scans on them, a couple days from now. Just keep them on your watch list to see how they develop. But that's a pretty common thing to have to kind of watch something develop and see if it's going to happen or not. On your show, we used to talk about, you get the breakouts, the gap ups, and you'd like to see it pull back to gap support. You kind of have to keep an eye on that. You can do some scans to kind of alert you when certain things are getting close to the EMAs, but ultimately you got to look at the chart. So
yeah, the scan can only do so much.
The scan is designed to take you from 25,000 or 50,000 or whatever down to 50 or 100 or whatever your sort of threshold of pain is, as I call it.
How much you want to look at, right?
Exactly. How much time are you willing to spend, or do you have just to look at this stuff? And then, but then it's like the last mile, Amazon or the deliveries, that's the last mile. That's the tricky part. And it's similar here with the charts. So those are some strategies for the pullbacks. Let me look at something. I want to see some. No, had something I was going to check to see, and it wasn't there. Okay, so let's look at our vaccine bump. We talked about doing this and maybe look at some rates of change. That's another way we can look for short-term changes in performance.
Yeah, so today it's Friday, and of course last Friday's close was pre-vaccine. So anything, I guess, what would you use? 5 periods, 5 days back?
Sure. I guess I'd thrown in 6. We can throw 5. That's
Would that would go all the way back to Friday, right? Because one would
yeah,
be
especially
yesterday.
since it's as of we're running as of yesterday. So we can run this. Oh, this is the intraday update. So yes, so that would include. So we're done there. Is I just put in a volume filter here to try and weed out some of the little guys because I'm looking at the whole world here, with the U.S. anyway, the whole world of U.S. stocks, as it were. So I'm going to put in this, and I thought I'd start with the group as healthcare because most of the things we're going to see probably in the healthcare area. I had talked to some people about the fact that apparently a lot of the vaccines have to be kept cold. So some of the possibly the transportations companies that are able to do large scale chilled deliveries might be someplace to look. But I thought, let's just look at healthcare. That's sort of the obvious low hanging fruit here. And what we're going to look at is the rate of change over the last 5 days is greater than 10. So I'm looking for something that's gone up 10% this week. And we're sort of sitting at a high. And I'll turn off my rank by here and we'll show what this. There we go. So we got 53. As you can see, like you showed, most of it's in the biotech area within healthcare and pharmaceuticals. Some providers, because there's going to be a lot of nurses giving shots at some point. But most of it is in the biotech area. And we can see there, yes, so we've got some rates of change that are pretty high over the last week. Some are pulling back a little bit today, but for the week, yeah, there's some a lot of biotechs have come out.
Is biotech, is that the largest industry group in terms of number of companies that's in the scan engine?
Oh boy, I would no clue. I could go through and do industry as biotech and give you a number, but I'd have to do some sampling to see if it's massively higher than something else. You know, I mean, you've got like internet or software is going to be pretty huge too.
Yeah, I just know when I run scans, when I do chart lists and so forth, that there tend to be a lot of biotechs. And I think there's a lot of small cap biotechs out there. And so when I run, yes, some of these I do get inundated with biotechs.
Mm-hmm. Let's go back. I had meant to show this rank by. We can do this to automatically. We can sort our tables, as you know. You can sort by any one of these columns. You can also add this rank by, and they'll automatically rank these. I did have a bit of a start because I thought, wow, 1,256%. This thing must be just flying up off the chart. And I looked at it and it's going down, and I said, uh-oh, something wrong there. Turns out there's a 15-for-1 reverse split that the scan engine won't probably get loaded until a few minutes here. That gave my heart a bit of a, uh-oh, that shouldn't be there. What's wrong? Because I write the scan engine. So if there's a problem like that, I got to go figure out why. So thankfully,
Bill's got to go. Bill's got to go for 5 minutes. He'll be back.
Yeah, exactly. Hold on. I got to go tinker. Ignore the man behind the curtain. But the rank by does allow you to. So
I'd never used that before. I've never used the rank by. I didn't realize you could do that.
Yeah, it allows you to. Originally, it's been designed to just take one item, rank by SMA, rank by whatever. You can say close, open, high, but those are already in there. You could just go sort them, but you can put any technical indicator in here. People have started trying to make this more complex, and I had to actually go out and scramble to try and allow it to be more complex because originally it wasn't. But you can't really get super crazy in the rank buys. You can't do big, huge clauses where you put and this and that. And 4 days ago, that just is too complicated. It's really just designed to take a single item. So if you wanted to go down and choose any one of these and plonk it in there, it would work. But if you try and extend this, it will start to fail. So, but if you're looking for something, you're obviously specific to, in this case, we're looking at rate of change, then yes, you can just add that in there and automatically get the item ranked.
So, I mean, you could rank by something that's not in the scan itself. So I could say rank it in RSI order.
Sure.
Okay. All right. So yeah, I mean,
Really
so then you could
standard.
rank it by overbought.
Yeah. So we can do here. So there's our RSI. Look at that guy. Speaking
Yeah.
of gaps, sometimes I'll see one that's so bad up there and I'll actually not see the last bar because it's so high up. I look at that and go, that doesn't make sense. I'm looking for a bar down here. Oh, it's way up there, up 93% today.
Yeah. You own that one?
Yeah, I put my mortgage in that one yesterday. See, I keep joking with people that, there's the yesterdays or the 3 days ago time clause on the scan engine, and I'm working on the tomorrow's clause.
Yeah.
Because that would
Let me
just
know
make me a
when you have
lot
one.
of money. That would make me a lot of money. And I've been working on it for 10 years and still haven't nailed it.
Yeah. Don't say anything to anyone. Like John said, just send us your resume when you get that one.
Yeah. So those are some ideas on how to find the healthcare. We could, obviously put this down to other groups, but obviously healthcare was sort of the go-to place if we're looking for somebody who's going to benefit from some of this. Although obviously, like we're talking some of the shipping companies, and of course, my view is that vaccine, great. It's still going to be a while before that really gets out and propagates. So, I mean, there may be some waiting time, and this may be one of those, buy on the rumor, sell on the news sort of events.
Yeah. I was talking about a little bit earlier because back in March and April, I was became a big fan of the accumulation distribution line because it was much better in terms of telling us where money was going versus, say, the on balance volume. Because we were getting all those gap downs back in March and April, but then half the market would rally and the other half would keep going down. And so it was the AD that really separated the best versus the worst. And the last 2 weeks, since the end of October, we've seen the kind of the polar opposite. We've been seeing the market gap up, but hasn't been finishing strong for the most part. And so almost this entire gain so far, or actually more than this entire gain in November so far, has been as a result of gap ups. It's not money. It's not market's not being driven up during the trading day.
Right.
And so kind of interesting that you say that, because I think that's exactly what's been going on.
Yeah, I mean, we were talking about short term, and I think it is short term. I mean, there's going to be a bit of furor over it in the near term. You've also got, the election, and how is that going to potentially change paths forward in terms of who's going to get money and who won't, and whatnot. So there's a couple of things sort of, I think, that are kind of feeding into this right now.
Yeah. There was a question that came in, and you had a scan up earlier. And I remember looking at it, and I wanted the same thing, but there was a syntax where you had written, and you were trying to look at volume that was already like 1.4 times normal. And so you had the asterisk 1.4, and then you had the less than volume. And so a question that came in was, shouldn't it be greater than volume? What is that less than? What is that telling you?
Well, we take the 60-day average volume, we multiply it by 1.4. So let's say our normal volume is 100,000, right?
Mm-hmm.
We multiply it for an hour, 140,000. That means our 140,000 is less than what our current volume is. So that means our current volume is greater.
I gotcha. Okay.
But we could reverse that. One of the things that we commonly reverse, we talk about crosses above, and there is no crosses below. The way you do a crosses below is you'd say, we just reverse it. So that's how you do crosses below. So you basically can think there's a line across the chart at 90, and the scooter, it looks like 90 went above the scooter line, but it basically also means that the scooter line went below 90. So you can flip them backwards and forwards.
Okay. So then you could put in that, you could say volume is greater than, and then list the rest of it.
Mm-hmm.
Okay.
I don't know why I did that. I guess I'm so used to it. My brain automatically I guess my brain's used to flipping upside down and backwards. So that's how that ended up there.
Well, you got to be used to flipping upside down if you're following the market.
Well, I do pretty good at going upside down in the market sometimes too. But yes, so that's that. I was trying to think of other questions that I had heard before I came in. I think the the percent relative was the main one, and ability to use the sector and industry. And that was a similar sort of thing. Let me just, I think I've got a chart. No, that's maybe not in this, but we talk about, let's see here.
Yeah, when you're looking at relative highs, there is a question here about relative highs, and wondering if, if there's any way to scan. I mean, we kind of talked about this already, but if you know that there's a symbol or there's a stock in an industry group, and you want to know how it's performed relative to its industry group, you can't scan against that. But I think when you showed, the price relative earlier with the industry group in there,
you could get the outperformance, and then you basically, you can dial up that percentage number until your stock shows up or disappears.
Right.
That's one way to do that. Other than that,
So
it would be
I guess you could go in first and just download into a chart list every stock, say, in the industrial group. So that you have a chart list of just in, go ahead.
Or you can use this group here and just say,
yes,
sectors, industrial sector. You can narrow that down to any sector or industry. That's
okay.
As opposed to creating your own chart list, unless there's something there that you specifically want. The nice thing is that we update this in theory. So you won't have to, your list won't get stale. Unless it's something that's sort of a custom list of some extra criteria that you want to put on it.
Okay, so if you're looking at industrials, you want to see which industrials have outperformed the S&P by X percent or the XLI by X percent. First, put in there your group, and then put in that price relative that you did earlier.
Let's see what we can do. So that's a way of saying, look at the industrials, find things that are outperforming the XLI, and then we ranked by them. So this is probably the one that's doing the best.
Right. Okay. Then if you wanted to narrow it down further, like you said, just keep adding filters, price filter, volume filter, or whatever.
Yeah. And you can change the number here. But yeah, there was a lot of time, maybe 5 or 6, 8 years ago, that I was spending working on relative strength. And I'd been, if you ever follow like the IBD, they've got the relative strength score. And at the time, there wasn't a lot of, this was when we started thinking about writing the scooter. And while the scooter was great, it only applied to a subset. I mean, there's a large subset, the small, medium, large is probably the equivalent of the S&P 1500, roughly. Although I think we have actually more, because I think the small caps are 1,800 or something. It's like the Russell 2000 equivalent. But I thought something like this percent relative would be great, because then I can dial it into any stock I want. I can dial it into the sector and the industry, and I can have the scan engine. So what the industry is. Don't make me figure it out. Go out and figure it out yourself. That's what you're a computer. You do that thing. So that's why I came up with the percent relative, and that I find this to be very useful, because a lot of times we want to say, okay, in my own breakouts, I'll say, find me something that's doing, say, my 52-week high and strong volume, but also show me something that's outperforming the S&P 500, its own sector, and its own industry. Even if by 2% or something. I don't get a lot of hits on those, but when you do, then you've got a way you've narrowed it to a really well-performing subset.
Yeah. Okay, question that came in on scanning on previous days. Now you've got at the top that starting 0 day trading days before. I guess maybe if you could just explain for a second the difference between changing those days there versus putting in 22 days ago or 5 days ago, down below. What's the difference there, just to make sure everyone understands that?
So what this will do is it'll go back 22 days from wherever we're at. I don't know exactly where that is. And then let's see. So here we've got two components that have different dates, and this is perfectly acceptable to do, right? So we've got one that goes back a month and one goes back a couple weeks. So what this does is says, take this whole scan and move it back. So I'm going to move this back to November 12th. So now I basically add these. So now I'm looking at 30 days ago close and 21, whatever, days ago volume. So it moves the entire thing back. So say I want to do this scan, but like, well, let's go back and see what it looked like in February. Go. So it's easier than going through all of your items and adjusting the number. You can take the entire scan with all of its relative date strings and move the whole thing back a certain amount.
Right. Okay, so that the top one there moves you back the number of days and runs that scan as of
that day,
sometime past. Right.
We call that sort of the global date offset, and these would be sort of local. So this basically adds everything. It can get a little tricky if you do weekly. So then it says, okay, what does it look like when you move a weekly scan back 200 days and the thing falls on a Wednesday? So then what I have to do is go out and create a fake weekly bar that goes Monday, Tuesday, Wednesday, 200 days ago. That can start to get a little tricky. The daily ones are easier because we don't have to compute partial. The same would be true of a monthly. You're a monthly bar, but you've moved it back a number of days. So now our normal monthly creation of the last bar needs to be redone. So that can get a little bit tricky, but that's basically the purpose of this, is to take the entire scan, all of its dates, and move it back some chunk of time.
Okay. Another question, maybe organizing your scans. There's someone wrote in a question, said that they've saved 75 scans and they'd love to be able to reorganize them. Is there a way to edit it other than going rename by rename? So in a way, we can edit a chart list component in edit mode.
Yeah, not really. I think you can do bulk edits. There's this view all button over here on the top right.
Yeah.
I believe it just allows you to multi-delete. It'll show you all your scans and what all of them are for a quick one in case you can't remember what's going on with a particular scan. But there's no sort of bulk rename.
Okay.
Yeah.
So you do have to go one by one with the rename.
Yeah, I can't think of any easier way to do it.
And how do you organize yours when you name them? Do you have a specific way that you like to organize them? I see you've got, asterisks.
Asterisk just as a way to put it at the top. So if there's something I want to find, so like if I'm working on somebody's guest spot, I'll put them up top.
Okay.
It's
how does it organize? How does it organize them? Does it organize them by?
It's alphabetic, just like a chart list. So you can put numbers in if you want to organize them in, some sort of numeric method. I end up not having so many scans that I really need to organize a big chunk of them. I only have probably a handful of scans in my main account. This is my test account at work, so there's all sorts of weird various things in there. But my personal one, I do my breakout scan, and then sometimes I'll have a couple of PNF ones for looking for like triple top breakouts and that kind of thing. But I don't have so many that I really need an organization plan. But I would say that most people who have larger number of scans, and there are people who literally will use all 300 or 200 of their scans. In that case, I think it is the naming convention. You can use the numbers. It is in sort of an alphabetic order, so it will populate. So you would say 100 dash if you had scans that were momentum based versus breakouts or pullbacks, or however you wanted to segment your scans. You can do them numerically or by name. That's probably the best way to do it.
Okay. Let's see if there's another question here. Still got a few for sure. Is there a way, or how can you add SMA or EMA based on a price's daily low instead of a close?
Let's see, what was that again? How you,
I'm trying to figure out exactly how can I add SMA or EMA based on price's daily low? So I guess, I mean, it sounds like you're looking for the moving average of, 10-day moving average of the low as opposed to the 10-day moving average of the close. That's what I'm kind of getting. Is there a way to do that?
sure.
Okay.
Actually, we can do this. You can also put anything in here you want. You want to put, upper Bollinger Band or whatever. Most things you can put in here. Again, if you get really complicated in here and try and do upper Bollinger Band minus the Kopic curve times the Martin Pring, that's not going to work. But some of the more basic single indicators and open, high, low, close volume and whatnot, we just sort of defaulted to volume in our default, but you can change that to open, high, low, close, whatever. Same is true of EMA.
All right. Another question came in. This is definitely a question for you, not for me. Would like to have a number for slope on a semi-log chart. This gives percentage growth for any stock scale. How can we get slope?
There is a slope indicator. It's over this number of periods. And so that's another way, if we were going to spend even more time on this in terms of finding uptrends or downtrends or whatever, we can put a slope on there that does a linear regression of those things and comes up with the slope to say whether it's rising or falling. So that's another way you could say, on my pullback, I want to say the slope is negative. Just, that gives us you're talking about your pullback scan. You did like 5 days ago, 4 days ago, 3 days ago, and that's what you kind of have to do. You might be able to say, okay, replace that with a slope that's negative. It would sort of snap a line through those and pull down, because then if you had a case where there was one day where the thing went up, your 5, 4, 3, 2, 1 approach might fail if number 3 actually bucked the trend, but it's still in the general trend. A slope would sort of average that out and be able to say, well, it's negative, even if day 3 actually kind of popped up a bit. Day 4 might have pulled it back down such that the general trend is still down.
Okay. Let's see here.
The scan engine won't know anything about logarithmic scale. It's just it's looking at the numbers. So the logarithmic is just a visual plotting. So it won't be able to, the scan engine won't know anything about that, but it'll tell you the slope.
Okay. Let's see, another question. If I wanted to see the top 10% of stocks in the small cap and above space, can I do that using price relative?
Yes, let's see, we could do, well, there's a couple of ways we can do that. Let's see, remind me, we want to do small caps.
Yes.
So this here alone will find everything in the small cap universe, which I believe is about 1,800 items, which is, say, call it the Russell 2000-ish. And since it's a 1 to 100 scale, anything above 90 is in the top 10%. Now that's using the Scooter logic, which is you can go into chart school and find the formula. It's a combination of long-term, medium, and short-term relative performance, with giving more weight to long-term, less to medium, and less to short. So that will give you the top 10%. I mean, that's probably the easiest right there. That'll give you and then you can also say,
Okay.
So this is the downside of the scooter sometimes is it's using the longer frame. So if you get something that has some really long term up performance and then some weaker near term, it can throw the number off. The same thing will happen if you get an event that causes a huge pop up or pop down. The day you cross that event, it can change the scooter. So there are cases there where you can get some weird numbers, or this guy is just going flat, but see here it had a large dip. So if we started calculating at a lower number, this looks like it could be high, right? So that's one of the downsides of the scooter. But let's see, you also had mentioned, let's see, we wanted to do, if we want just the small caps, one way to do it is to say, show me anything that's got a scooter in the small cap universe that's greater than 0. That's basically everything, right? Because you're saying basically show me every small cap. So that's a kind of a trick to limit. Oh, this is also 198 days ago. That probably helped to ruin that last result. And then we wanted to say, percent relative to, I forget what they were looking for at this point. So we can say the S&P is greater than 0. This will say all the small caps or with greater performance in the S&P over the last 20 days. And I've kind of forgotten what the details of the question was. Something about industry.
Just if I wanted to see the top 10% of stocks in the small caps and above space, can I do that using price relative?
Yeah, you could then do a rank by and then see the top percent there. I don't really have a way to say take all of these results and then crop it by 10%. The score here is sort of indicative of 10% because it's a 1 to 100, 0 to 100 range. So it sort of by definition is percent. These guys, you would kind of have to dial them in.
Okay.
Just use the rank by and then change this percentage number until you start to, get whatever percentage you think.
Get down to the number, kind of back into it.
Yeah.
Okay. I got a very general question, and I guess this could be answered in a number of different ways, but can you show a good overbought scan?
Let's see. Well, let's see. How do we want to define overbought? We can say
it could be RSIs. It
Yep.
could be, well, you do what you would do.
Okay. That's weird. All right, let's just do it this way. This is a fairly straightforward one. Let's see here. Sorry. I'm doing something odd here.
Yeah, maybe they're none over 90.
Oh, yeah, I guess that's my assumption that there would be an overbought S&P, but yeah, let's just bring this back to, and that's what you have to do sometimes is say, oh, well, let's make this a little bit wider. I'm going to say that one's it.
Yeah, that's kind of an overbought chart.
I'm thinking that train's left the station. So that's an easy one if you're using RSI as probably an overbought. Another way you could maybe look at it as let's see, where am I thinking? Is it up here? You could do a full stochastic or something. It's up in that 90 range over its some number of days. It's at its highest peak.
Yeah, I think another way too would be like the PPO, since it's a percentage of your moving averages.
The PPO on the MACD kind of ideas, something like that. Those would be the sorts of things, and then just find the high range of those sorts of things. That probably be my general suggestion on those. And then you can of course put other qualifiers on it. You could say I want to see a price change that's greater than a certain amount, like you can do percent change. So this means show me everything in the last 10 days who's gone up more than 10%. So you could look for something that's overbought and it's really accelerated quickly, if that matters to you. Could be overbought and just trending. I mean, if you get a really hot stock, it could just be slowly moving its way up for a very long time and still be, we talked about this scooters years ago. I remember me and Greg Schnell, who's a big champion of the scooters. Just because some scooter hits 99.9 doesn't mean that it's sort of like, well, now it's hit its high, so it has to go down. You looked at something like NVIDIA was at the top of the scooter list. I mean, I think maybe something like Tesla now can be at the top of the scooter list, and it just keeps going. So it doesn't need to have a sort of really meteoric 10% change or something. It can just be doing a smaller change for an extremely long period of time.
Yep. Another question that came in is, can you scan for chart patterns like head and shoulders or pennants or symmetrical triangles, anything like that?
Not directly. Those are, we've been thinking about doing those for quite a while, but it just hasn't really come to the top. Those are obviously a bit more complicated pattern to try and figure out. Again, the scan engine has that issue of within. We'd have to run several days worth of data to try and spot those, whereas right now the scan engine is pretty much designed just to take a single slice. You can try and build it, like you can say 4 days ago this, 3 days ago that, 6 days ago that. It's going to be hit and miss, like you say, because if one of your parameters is off, like we were talking about on your 5, 4, 3, 2, 1 downdraft, if day 3 actually pops up, then it's not going to show up on your scan, but it still may exhibit the pattern because it's kind of fuzzy. And so we need some fuzzy logic to go in and say, the general trend is this, and we don't have it for things like triangles and patterns and head and shoulders and those sorts of things, channel breakouts and that kind of thing.
Yeah, and I think everybody visualizes these patterns different too. I mean, I've seen technicians who I respect a lot show a head and shoulders pattern, and I look at it and I'm like, that doesn't look like a head and shoulders to me.
Yeah, that's one of the downsides of it. It's very fuzzy, and depending how you unless you can tweak the dial, I mean, if I were to come up and say, here's my version of the scan engine head and shoulders, and you don't think it is, then how do you adjust those parameters? There's a lot of tweaking, and it's very easy to be able to say volume 102,000 versus 101,999. But how do you tweak, what's the slope for a symmetric triangle have to be, or head and shoulders, how deep does the head need to be, or, is a double bottom that only goes down 1%, is that really a double bottom? It gets very tricky.
Right.
But yeah, so that's something we'd like to do, but no immediate plans.
Right. And I know you can scan by candlestick patterns though. So you do have those. Right. Yeah. Yep.
And we have some basic ones. A lot of these are like multiple things need to be true. I mean, they're patterns. They're 2 or 3 day patterns in some cases, but you can also sort of build your own. These are sort of just 1 day at a time kind of. Well, these, the uptrend, downtrend, I think look over a 3 or 4 day period, but these guys are a little bit more specific. So those as well.
Yeah, and kind of a similar question to the chart patterns, and I'm assuming probably the same type of answer is, is there a way to identify stock that has broken above or below a trend line? Well, that's probably going to depend on what you view as a trend line. So it's hard for the computer.
Exactly. Yeah, you're sort of in the same boat there.
Yeah. Well, we're past 12, and I know you've been kind enough to give us an hour. I'm just going to look through and see if there's maybe one more question here. I've tried to answer most of them. Well, I'll tell you one question that I get sometimes, and it was asked earlier, and then the person that asked found their own answer, but I know it is asked a lot. You had mentioned earlier that you like to scan for point and figure triple top breakouts. How do you do that?
There's a section here for P&F patterns. So
do you add, when you do it, do you add any other filters to it, or are you simply looking at the P&F?
No, I mean, I'll usually use things like my price things. I want things above a certain price. I'm not really looking for penny stocks. I want things that have volume. So I use a lot of my normal sort of just things to weed out things I know I don't want. And from there, it kind of depends, how many hits do I get? And I think, well, maybe do I want something that's, I'll add a little bit of extra criteria if I think the number is too big. But I'll start there and look and just kind of see what I get. A lot of times it's not a huge number. Let's see here. Well, of course, I'll run one today. It'll be 1,000. 578. So of course we got Indian stocks and Toronto stocks. I would limit these, and that would shrink it down a fair amount.
All right. Okay, I think most of the questions have been answered. Now, like I said, I think we're kind of out of time here, but it's always great having you on here, Bill. I mean, my gosh, so much knowledge, and you've taught me a couple things today that I didn't know previously. I can tell you that price relative is going to be put to use this weekend.
Well, give me a shout if you need any if you want to play around with that.
All right, yeah, I absolutely will. Appreciate that. But anything else that you wanted to add, or anything you didn't cover that you want to talk about, or are you good?
No, I think that's about it for this episode.
Yeah, and we try to get you back every once in a while. I still miss the shows. We used to do our shows together. For those of you not familiar, Bill and I used to do a show at Stock Charts probably 4 or 5 years ago.
I was thinking of that. That's mind-boggling.
Yeah, it was always fun because having Bill on the air makes it a lot easier, because you got the source to go right to for any scanning questions and so forth. But always a pleasure having you on here, Bill.
Thanks, Tom and John, and thanks everybody for listening. I will talk to you next time.
All right, sounds good. There he goes, Bill Shelby. Again, just want to thank him so much for coming out. I know, this is during his regular work time at Stock Charts, so to be able to carve out an hour for us is certainly appreciated. I think everybody gets a lot listening to Bill. I mean, it's one thing to go to the website and try and figure out the scans, and another to have the creator of the scan engine showing you exactly how to set things up. So it always is a pleasure. Thanks again, Bill. And I think that's it, John. So I'm ready to wrap this thing up. I do want to just maybe point everyone, those of you who are interested in joining us for our sessions next week. Let me just show you real quick how you can do that. So if you go over to Earnings Beats, if you just go to the home page, there'll be a Join Today button. Just click on that, and then just come down, fill this out. You'll be charged $7. You'll get refunded the $7, so there'll be no cost for 30 days. Stock Charts has a free 30-day trial. I would suggest that you take us both up and just experience 30 days of this combination. Our research platform and Stock Charts tools and features and the scan engine and everything that Bill just went over. Take that combination, all the webinars that we have coming up over the next 30 days. The cost of doing this is $0. The benefit, I guess you be the judge after 30 days. But make sure when you sign up at Stock Charts that you have an extra or a pro membership. I think pro is a little bit more extra. I think the basic's $14.95 a month, if I'm not mistaken, and extra is $24.95. So it's extra $10 a month. But the big difference for me in that leap from $15 to $25 a month, that extra $10 gets you, I believe, 250 chart lists that you can save. As a basic member, you can only save one. So when I showed earlier in the webinar how you download all of our chart lists into your account at Stock Charts, if you're a basic member, you can't do that. You need to be at least an extra member or a pro member in order to do that. So that is well worth the $10 a month to be able to do that and to download all of our research into your account. But we'd love to have you. Monday will be our next webinar talking about market rotation. As I look at the market today, or I was looking at it today, let me see if we can just get the well, we got the Dow leading, S&P both outperforming the NASDAQ. We are seeing some strength in small caps and mid caps today. VIX down 2 points now to 23, down 8%. That's good. I'm just going to continue to watch this rotation and the gaps versus intraday trading. I think those are a couple of key things to watch for in the near term Further out, I couldn't be much more bullish. Short term, we got history on our side, but we got some of these other rotation issues to deal with. So a lot going on. I'm going to talk a lot more about that on Monday. So hopefully you can join us. But John, that's it for me. So unless you have something to add, I'm ready to wrap it up.
I think we're all set. We'll make sure everybody gets a copy of the recording.
All right. Sounds good. Everybody have a great day and happy trading.